Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Polygon Matic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to check that out before watching this one so that you have more context. It's going to be in the top right-hand corner of your video. Now, jumping into the daily chart here. So as you can see, we are on TradingView, and if I zoom out, I want to show you the Fibonacci retracement that I have set up with the targets to the downside. So you have your all-time high here, which is the swing high of the retracement, and you have the swing low of the Fib retracement over here that we set during July of 2021. And I took this high, took the low. You have the extension levels to the downside. So we've had them for quite a while now. And as you all know, once you lose the first fib level, which is 62.5 cents, once you lose the swing low of the fib retracement, you usually retrace all the way down to the 1.618, which is sitting over here at 24 cents, slightly higher than 24 cents. And we haven't gotten there just yet. Now, was this our bottom? As you can see here, we wicked from the 1.414 and we have a very nice V-shaped recovery at 33 cents, which was also a level that you had and you could have had some buy limit orders. And I think we're up around about 80% from this low, as you can see, and 90%. So almost a 2x during a bear market. This is crazy. And personally, I have been buying Polygon Matic and I am in profit already. You can check all of my trade alerts in my Patreon. The link is down below in the description. I drop in low cap jump calls, technical analysis, video requests from my patrons. So a lot of stuff is in there. And yeah, so right now, I do think we're going to run into a couple of resistance levels and we're going to take a look at those. But I'm not saying that we're not going to get back to the 1.618 because as you can see, once you lost this this first level, okay, this first fib, you did come back and back test it as resistance, okay? And you had another retracement down to the 1.272. So you back tested this level as support and then you're retracing to the upside once again. So if you break through 62.5 cents, which means you're going to break through the first fib level and you're going to break through the 55 EMA on the daily chart, which is the red line. And if you start doing that, that is going to be a very, very bullish sign in my opinion. And at that point, we would be looking at another resistance level here at 74.5 cents. And this is because we have run into this level as resistance before. So once we dropped here in May, we had a retracement to the upside, and that's where we ran into resistance. And from there, we created this falling wedge, which we ended up invalidating. And right now we're retracing to the 55 EMA. So if you want to take some profits right now, I wouldn't say that that would be a bad idea, but that would be, that's on you if we continue going up. Personally, I'm just taking my Matic. I'm waiting for $10+ for Polygon Matic, and I'm not going to be taking profits anytime soon. But if you're looking for a cheeky little swing trade, then I would wait until we break the 55 and I would have some sell orders here at 74.5 cents. Now, if we don't get there, okay, you have to be very careful with swing trading because you never know when the bottom is going to be in, and we can just simply continue with this uptrend. And if you sell right now, you're just going to be left down here while the price will go up. So we have to be careful with swing trading. So 74.5 cents is a very good level for you to keep an eye on. As you can see, we have printed a low, we have printed a higher low, and we have a high over here. So in order for us to complete or to continue with this uptrend, we need to break the local high here and we need to print a higher high. So if we do that, we get to 75 cents and then we start retracing back to the 20 EMA on the daily. That could be a very bullish sign that we are going to continue on and we're going to get the bullish cross where the 20 EMA crosses above the 55 and we have our, bull market confirmation, but that is yet to come. Okay. you can retrace all the way up to the golden ratio here at $1.12, and you can still get rejected back down and come back lower here all the way down to the 1.618 because we are in a bear market. You simply create lower highs and lower lows all the time, and you get rejected by the 20 EMA all the time. So ideally, you would want to break the previous all-time high here, okay? But you're not going to do that obviously right now. So you can even go, like I said, all the way up to the golden ratio here, and you can come back down, and this would simply be a lower high, okay? So if you start getting overextended, then I wouldn't be buying Matic at those points because you don't want to buy big green candles. You want to buy big red candles. And if we take a look at the daily RSI, I did give you the support trend line in the last video. As you can see, you have one bounce. You have the second bounce. Then you kind of had a back test of resistance here a couple of times over here as well. And in June, when we had our video, our last update was June 6th. So we were just above this trend line. We had a little bounce from it, then we lost it. We came back up in this huge impulsive move to the upside. Then we back tested this trend line as support. And right now we're having another strong impulsive move to the upside. So this trend line is holding us as support for now. Potentially look for another bounce off of support at this point over here. If that happens, you could potentially set up a couple of trades from here. But if you start losing that, then just wait a little bit. Don't go all in at this level here, right at this support. If you lose this, put in some bits over here, then buy some more down here and buy some more if you get oversold. Because if you're below the index of 30, as you can see, you typically start recovering from this area very, very quickly. So that is regarding the daily RSI. I do want to switch over to the Binance chart. So I did give you this buy zone in the last video. So this was anywhere from 39 cents all the way down to 26 cents. And like I said already, we have done a very nice 90%, 95%. So this was a very, very good trade for you. 95% in under a month. And I did give you this zone because this was our bottom back in April. Okay, so this is where you bounced from in April and you entered that parabolic move. And this is why I had the buy zone for you. And I would expect us to come back down here because usually you start, you retrace down to where you came from. So for example, here you started recovering from 31 cents. You had to move to the upside, then you usually come back down to where you came from to create a double bottom pattern, and then you continue on. But that is only if we are going to flip bullish here. It's all up in the air at the moment. This could be a little fake out move. No one knows for sure, but I'm more, leaning towards us having another pullback on Bitcoin because there is not enough stability in the markets, not enough bullish news. So this is just a little fake out to liquidate some long, not long, but short positions. We got a bullish cross here, June 21st. That was a good sign. We're getting above the histogram. The histogram is starting to get, is increasing over here, the histogram bars. And if we go into the daily stochastic RSI, now this is a good indicator for you to look at if you want to take some profits. So potentially look for us getting over here to the upside here above the index of 80. And this would mean that we are overbought on the daily stochastic RSI. And that is a good time to be, exiting your positions. Also, I do want to go into the weekly chart over here. And as you can see, the weekly is starting to recover from the oversold, as well as the weekly RSI. So both the weekly stochastic and the weekly RSI are recovering from the oversold. And this was a very good entry point for Polygon Matic. And as you can see, we can continue on from here. And usually you take profits when you're in this area or when you're doing something crazy like this. But when you're down below here, this is when you want to buy. And also, I want you to pay attention to the MACD, which is a lagging indicator, as we all know. But this lagging indicator, if we get a bullish cross here where the moving average crosses above the signal line, the red signal line, this would confirm the uptrend and essentially confirm the bull market potentially, right? So the uptrend would have to start first. Okay, then a week later we would get the bullish cross, and that would be your confirmation. But we're just gonna have to wait and see what happens. All these indicators cannot, give you a guaranteed answer, but this could simply be a bounce from support, a move to the upside. We could potentially get all the way up to the 20 EMA on the weekly chart, which is currently sitting at 93.5 cents. So we could simply get a rejection from the 20 EMA, right, and then come back down into this buy zone that I gave you. So yeah, that is pretty much it. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter, feel free to join my Patreon, and feel free to become a member here on YouTube. You get the exact same benefits that you do on Patreon. Thank you all for watching. I'm going to catch you in the next one. Goodbye and good night.